Hello traders, thanks for joining me again. I'm Anthony Birdsall from the Excellence Assured Trading Academy, and in this video I'm going to demonstrate my gold trading system for you. You may have seen some of the videos that I've put on YouTube previously which I've explained a little bit about the system, and I'm going to add to that today by showing you some of the live trades that I've taken today using this system. And I'll also explain, I say I find that this system works on every time frame because it's basically based on the price action. And any decent trading system should be based on price action. And so before you operate a system, you need to understand how price operates. And that's what I'm teaching you through these videos. And then you get into the finer details of how do I construct a trading system that I can follow. You can't ever just turn up at the charts and go, I'm going to see what happens here, and I might take a trade randomly, or I might not, or today I'm going to do it like this. You can't do that. My system, my gold system, is based on many thousands of thousands of hours of practice of refining my art and delivering it, and I can explain this system very quickly to people, but it doesn't mean that you're going to be able to operate it quickly. It means that I can get the information, all the information across quickly, and then you need to validate it all for yourself. So I'm going to talk about my entries here, and I'm going to show you my exits as well. And in terms of exits, the exit is where I feel that I want to exit. Normally, it'll be at the end of the candlestick that I'm trading, and that's normally the case. Today, I'm trading quite close to the open, and I don't always leave trades right to the end of the candlestick, to my detriment sometimes, but I don't when it's in profit and I've got more than more than 1-to-1 reward to risk, then that's good enough for me, and it's trading to a plan, to my plan. You should always have a plan and a system that delivers better than 1-to-1 reward to risk, always, and then you trade the system, and the system is traded from watching the charts, waiting for price to line up, and then taking the trade. So I'm going to show you one of the gold system trades from the daily time frame that popped up the other day, and I'm going to show you that. But first of all, I'm going to take you through my live trades. Okay, I hope you enjoy. And if you've got any questions, then do ask them in the boxes below, in the comment box below. And do, subscribe to the channel if you want more videos like this. I'm trying very hard to give you some useful information to help you make money, or at least initially save you money, as you delve through the YouTube channels and pick somebody that knows what they're doing, or you hope that they do. Well, I've got a lot of experience in this and a good success rate of working with traders. At heart and in profession, I'm a coach, and I think that hopefully helps people. Okay, here's the chart, and I'm going to talk you through it. So the open has taken place. This is the 5-minute chart. This is the 1-minute chart. That was the open there. And I'm trading this chart, and price is just going up to the Lovely, perfect. Just going up to the river value, open green, closed, and there you go. That was the entry there, but I missed it. So, going short now. There we go. So I'm short. Price went back up to the river value, but you could see there, if you want to replay it, you could see that price was basically using the open of the candlestick as resistance, and once it had gone red, this candlestick, up until now anyway, it stayed red. So just waiting to get a fair deal out of this. Because of where I entered and I've got some slippage, I need to get my 1-to-1 plus, and the stop, mental stop, is up here and entry here, so it needs to go down here somewhere. That would be a good level. Let's see. Looking good there. Right, so there we go. Nice profit to start off. And I've got to wait now for price to go back up to the river of value. No trades from down here. It'll go back to the river of value, so there would be, a reverse trade potentially, but the trouble with those is that you don't know where the river of value is going to be by the time that plays out. So you might only have a tiny little trade, and like just happened there, it could be that price goes down here and stops you out before you start. So they're tricky. I prefer to use what I can see as my support and resistance, and that is the river of value that we've got. Okay, so just looking at this chart over here, you can see the red candlestick was bigger than the green candlestick, and that's relevant, indicates that there is greater desire for the market to go down than it is for the market to go up. And so here we go, price is up near the river of value again, and we'll have to wait to see where this closes. If it closes above the river of value, then that's no good for a short, but it may be good for a long trade. We'll have to wait and see where this candlestick finishes. Right, this could be, I need the price to go up to the river of value on this candlestick there, and right, we're in short again. So that closed below the river of value, perfect, and you can see the EMAs moving as price goes down, and this is going to be a good trade again, hopefully. Should be looking to get out in a second. There. Right, okay, so two good trades to start off with, and the entry on this one was very, very similar to the entry on the last one. We got a tiny little wick on the open, and that took price upwards. Then it went red, and that's when I was looking for my entry. Okay, hugging the river of value, trying to escape value almost. Not really, but you know what I mean. It's price isn't comfortable at value purely because half of the traders in the market want to go short, half of them want to go long, and they're going to push it one way or the other out of value. And this time it went down. So again, we're in a position now where, I exited here and its price has continued on its way down. I don't care. On that trade, my risk was minute, and I would have got out if price had gone above it, but it just kept on pushing down as my trade took effect. So now I have to wait for price to come back up to value, if as and when it does, and then you know, all of my entries are within a fraction of the river, of the 8 EMA, particularly on these trades. All of them are within a fraction, and that's deliberate on my part. And this one had a better, tiny little wick, I'm not sure you can see it on there, than this one. This one had a bigger wick, but it was good enough because you had the 20 EMA in the way, you had the 8 EMA in the way of price going up. The river was there, and so yes, we'll have to wait now for a similar type of setup. If you always take the same type of trades, like anything, like playing football, like playing tennis, like playing golf, once you get used to something, you know, tying your shoelaces, you were no good at that when you started, but I bet you're pretty good now. And this is no different from that. It might seem more complex when you start, but if you always take the same trades, then you've got a very similar level of risk each time, and you're basically just looking out for the same pattern to repeat itself. And that's the pattern that I trade as my gold trading system. So we'll have to wait now to see if this goes up and meets the river of value again. And as and when it does, I'll be considering another trade. I'll be looking, first of all, you know, if the price goes up and it closes above the ATMA in the middle of the river of value, then that's probably, you know, going to be okay for a 20 EMA bounce trade. But if it goes straight through, then I might be looking to go up. Here we go. Right, so I'm going to wait and see now. Right, is it going to bounce down, or is it going to go through? Waiting for the close, as always. Right, okay. So I'm considering going short again here. That's gone red. Okay, no wick on the top, you can see. So no trade. See where this one closes. Maybe another opportunity to go short. If, let's say, price goes up from here and closes just about there, that would be prime, just below the ATMA. Just below the 8, that's where we want it. Come on. And then we want it to go green. There, it's gone green. And if it goes red now, there. Okay, so we've now got a trade on. Risk is this. Stop is above there. If it goes up from here, and goes above the high of this particular entry candlestick, then I'm out for a loss. And I'm hoping it's going to go down. All the signals are great. The entry position is perfect, just below the ATMA. And I'm hoping for more down price pressure, more selling. Right. That's also still in position to sell, so I'm leaving the trade on. And hopefully this one's going to be a red candlestick, which I shall exit within. There. Just have a look at the entry on that one again. So price just below, opens just below the ATMA in as soon as the candlestick goes red, following a green wick, and then I'm looking for at least 1 times that risk as my reward. And just to fast forward here, you can see that there was my exit. So that's a good trade, and the third good trade on the trot. All perfectly in position, so the context was brilliant for all of them. The candles were
behaving themselves. The candles are all set great, and so the content was good, and I've got good Confluence on these setups as well. So it's all been a happy day so far. Right, price has been back up to the river value and is pushing down again at the moment. We've got a tail on this one. Oh, okay, so green and then red there. And then to up near the river of value with a little tail on it, with all my Confluence in position, and we're in short. And you can see that even though price dropped between me pressing sell and the entry showing on the screen, even so price moved straight away in the direction I was looking for it to go. That's because all the signals are good for the system. So looking for, I'm looking for at least 1 times that as my reward. So the higher the candlestick that the price is on now is my stop, just above that, and I'm looking to take profits in a sec. No. Right, okay.
Oh, I love trading. That was perfect. So some superb trades there. We're going to take a look now at a more sedate chart. We're going to have a look at a daily trade that popped up the other day, and I'm going to talk you through it. Left here, we've got the daily chart, and on the right, I've got the 1 minute chart. Now, I don't use both of these charts together in my trading, but I'm going to use the 1 minute chart here as a very condensed version to show you what happens in this candle here, because this is a gold trade. You've got price peaking, trying to go up, failing, and then going down below the ATMA. Then you get the market going up, leaving a tail, and the market spends the rest of the day going down and closing near its low. I don't trade the daily chart with the same volume as I trade, the 1 minute, the 5 minute, the 10 minute charts. I trade much more volume on the shorter term charts because the risk there may look the same as the risk on a 1 minute chart, but that is about 200 points. So that's a lot more, and when you're first starting out, you need to build up your profits in order to take these sort of trades, even at £2, $2 a point. It takes a bit of time to get to this level, but this is a perfect example of a gold trade. The price comes down, breaks through and into the river of value, breaks through the ATMA, and has a very small amount of rejection on the bottom, which means that buyers haven't immediately reacted and bought. And they did buy at the beginning, but then when this candle went red, that's the entry. So let's have a look on the 1 minute chart at what actually happened. Okay, this is midnight, and that's the time that the new daily candles come out. So at midnight, we're down here just over 39,600 on the index, and price went up, but you can see it went up here. But look, it went up and it came down, and then it higher low there, and then it went up. Don't forget that my entry is triggered when this candlestick goes from green to red. So let's have a look at when that actually happened. And I don't sit waiting all day for a candlestick to turn, you know, to change colour, I will take a look at the charts, you know, when I wake up in the morning, and that's when I will take the trade. So at around about, let's have a look here, that's it. That's the entry just here. Okay, you can see that the chart's moving about a bit, but you can see price went up overnight and then started coming back down. This is, you know, 2 o'clock in the afternoon UK time, so it's the open on the US, and that was the entry there. And it's no coincidence that I was looking at the chart at that point in time. Once a day I will check, you know, just before I go to bed, I'll check the prices on the daily charts and see whether there is one of these trades, and that was the entry just there, and it came about 2:30 in the afternoon, so 9:30 New York time. And so your entry's here. So if price goes above that, then that's a stop out. So it's got all day to go above this level here, and let's see what actually happened on the chart. I wasn't watching any of this, purely came back when I went to bed, and there. So price is going up, but it's still way below. You can see it's way below where I went in, up here somewhere, up here. So in at 39,600, and price is making its way through the day. So that's still 39,200 at this stage, so it's £400 in profit. But price closed, eventually the market close was here, and you know, and that's normally when I would I'd look at it and come out of a trade, or I'd wait until midnight. So you know, the market close was here, and midnight it was at this level here, 39,050. So there's a good 550 points profit in there, and the market finally closed. Where did it finally close? At midnight here. So 39.40. So it moved 10 points from when it closed to midnight. So yeah, I exited at the close of the market. And so that was the trade. So entry here, exit here, stop up here, and you're making, one of the benefits of trading longer term charts is the slippage that you sometimes get on shorter term charts, which can be 1-2 points, something like that, plus the charge for trading of 1-2 points eats into your profits. Whereas on the daily charts, of course, you're looking at 500-600 point win there, and yeah, nearly 600, and a risk of 200. And so, you know, when you're talking about that size, the charge is still the same. If you get slippage, it's still the same, and therefore it's a much lower percentage of your trade, which means that more of the money goes back into your pocket, which can only be a good thing. Anyway, that was the trade on the daily chart. Very valid, you know, you can see the good 2+ reward to risk involved in that, and it was a river crossing trade. It went through the ATMA there, came back down below the ATMA. I had the ATMA, the open of the candlestick, as my security you know, as my resistance for price going up, and the stop above the high, and the exit was down here. And that's what I'm looking for with these type of trades.
Right, okay. Right, that's brilliant. So thanks ever so much for watching this. I hope that, you know, we've started some education for you, or continued some education for you if you've watched these before, or if you've done my system. And they're the type of, the candlestick setups there are exactly the type of setups that you're going to be looking for when you're trading this type of system, or this system itself. They've got to be, the price has got to be up near the river of value when you enter. It's going to be on the right side of the river of value, and you've got to have the confluence as well. And we had all of that. We got some good trades out of that, and I'm hoping that you enjoyed watching this video. Do subscribe for more of the same. Thanks ever so much for watching. Catch you on the next one. Bye for now.